Assalamualaikum and hi everyone. I'm RABIAHTUL. Our group assignment is about financial statement and ratio analysis between two companies that four of us have already chosen. There is between AEON and TESCO. Okay, first part is about organizational context between two companies. There is AEON and TESCO. Okay, first AEON. AEON Supermarket, formerly known as Chasco Supermarket, and come from Japan. Jaya Jasco or Chasco is set up in Malaysia in 1984. TESCO opened its first store in Malaysia in May 2002 and comes from UK, United Kingdom, England. In Malaysia, AEON known as AEON Co Amber Heights, while TESCO known as TESCO Stores Malaysia Sendirian Berhad. Product and services. Both company and hypermarkets offer products such as groceries, household items, clothing, electronic furniture, toys, and its own food and non-food products, and also services such as financial services, telecoms, and internet services, and many more.
Assalamualaikum and hi, my name is SITI KHALIJAH. I will continue with the topic, how liquid is your organization? Based on current ratio in 218s and 219s, the abilities of TESCO Corporation to pay its debt is more than AEON's. The result in 218 simply means that the AEON and TESCO has some current asset. But in 219s, TESCO has current asset that can over 0.59 times its current liabilities than the AEON's. If we look the asset test ratio in 219s and 218s, TESCO still comes out to be more than AEON's. For account receivable turnover, the receivable turnover for AEON is more than TESCO in 218s, which is AEON is 6.21 times and TESCO is 6.71 times. However, in 219s, the receivable turnover for TESCO is more than AEON's, which is TESCO is 7.27 times and AEON is 6.67 times. The last aspect that we can look in the inventory turnover, in 218s, TESCO is 23.56 times more than AEON's, which is 4.71 times. However, in 218s, the inventory turnover for TESCO is 2.19 times less than AEON's, which is 4.63 times. Overall, it shows that the TESCO is more liquid than the AEON's. A higher ratio is in current ratio, and asset test ratio means greater liquidity for the company. The next question is, are the manager generating inadequate operating profit on the organization is asset? Overall, TESCO its managers are utilizing the firm asset more efficiently than the AEON's. TESCO provide a higher operation returns on its asset by managing its operation better, although not achieving a higher operation profit margins.
How is your organization financing its asset? Asset financing refers to the use of company balance sheet asset, including short-term investment, inventory, and account receivable, to borrow money or get a loan. Does the company finance its asset with debt or equity or both? We use the following two ratios to answer the question. That is debt ratio and time interest earned. Debt ratio is a financial ratio that measures the extent of a company leverage. Formula for debt ratio is total debts divided by total asset. For example, AEON 2018 finances 57% of its asset by debt and 43% by equity compared to AEON 2019 financing 73% of its asset by debt. TESCO 2018 finances minus 77% of its asset by debt and minus 23% by equity compared to TESCO 2019 financing minus 70% of its asset by debt. Times interest earned. Time interest earned is a measure of a company ability to meet its debt obligation based on its current income. Formula for times interest earned is operating profit divided by interest expenses. For example, AEON 2018 operating income is minus 6 times the annual interest expense and lower than AEON 2019 that is minus 2 times due to its relatively low operating profit. TESCO 2018 operating income is 1 times the annual interest expense and higher than TESCO 2019 minus 4 times due to its relatively higher operating profit. Okay. Are the manager generating a good return on equity? This is analyzed by computing the firm's accounting return on common stockholder investment or return on equity, that is ROE. Return on equity is a measure of financial performance calculated by dividing net income by shareholder equity. Formula for return on equity is net income divided by total common equity. For example, owner of AEON 2018 are receiving a lower return, that is 5.3% compared to AEON 2019, 6.4%. Owner of TESCO 2018 receiving a higher return, that is 9.5% compared to TESCO 2019, that is 8.9%. So we can conclude that AEON is a not good return on equity because have a lower return, and TESCO is a good return on equity because has a higher return.
I am NURUL and I want to continue with success factors and this. The example of key factors that influence company performance is the ability of management to cope with change and the effectiveness of the way information is communicated within the company. How AEON capitalize on non-financial factors? The first one is human resource. Human resource are at the core of the factors, and the successful use of human resource is primary importance to the sustainability and long-term success of the company. One of the key reasons why focus are crucial to the success of an organization is that they are the ones who are directly responsible for carrying out the task. AEON compliance with the best practices in AEON Code of Conduct, which have its basic principle in peace, people and community are the set of value to which AEON adhere to in conducting its business. AEON people constantly remind themselves of AEON Code of Conduct commitments through citation in meetings and staff assemblies. The company aims to compare itself against the best in the service sector. Second one is social and relationship capital. Capital of social and relationship is significant because it reflects sociability, productive benefits. Human beings cannot work together without social capital. This is because the common beliefs, norms, confidence, and belonging that make social exchange possible are social capital. Last one is natural capital. Natural capital can be described as natural asset, stocks in the world including geology, soil, air, water, and all living things. At AEON, they believe a green environment is the basis for a better life. As such, they have developed a comprehensive ecology program to address
the global warming issues. Next, we will see how TESCO capitalize on non-financial factors. The first one is human resource. TESCO mission of expanding and diversifying allows the organization to have the right people at the right time in the right place. Employees with a broad range of skills who are able to work flexible are more productive for the company. The second one is community. In market, the community is relevant because it creates the scope and identity in one position. In such a community, consumers associate with branded place, whether the business category is retail, restaurant, workplace, co-working, technical, or something else. In fact, the identity of a district is essential to generating demand for working traffic and a competitive critical mass that attract individuals. Next is supplier factors. Company needs to work closely with their manufacturers to get the most out of their goods, from sourcing raw materials to helping speed up the demand and to seeking better alternative for raw material as the market continues to become saturated. The relationship they have with their supplier continue to be improved by TESCO. Trusted partnership with suppliers allow them at great value to deliver great quality goods to their customer. They are committed to building long-term strategic partnership with their closest supplier partners and to enabling them to invest in enhancing the value and the quality of their goods and improving their supply chain's productivity. Next, we will go to what are the most significant internal risks to the company's financial performance. Internal risks are faced by the corporation from within the organization and occur during the company's regular activities. With some reliabilities, these risks can be anticipated, and thus an organization has a fair chance of reducing internal business risk. One of the internal risks to the AEON's financial performance is risk pertaining to IT system failure. There has been a rapid increase in the relative importance of AEON's IT system when within its overall business operation. However, in the event of a natural disaster, as in a major earthquake, it is conceivable that AEON continued business operation could be threatened due to damage to the data centers and IT system of the AEON. In such a case, there is a risk that the earning or financial position of the AEON could be affected. The second one is risk pertaining to tenant administration. Tenant administration perform a subset of activities which are performed by global administrators. The specialty store tenant base introduce a wide range of store that include clothing, miscellaneous items, and groceries at mall owned by the AEON Mall, actively interested in ensuring the safety and sanitation of store tenants' goods and services. The next one is the development time of malls. Mall development is a time-consuming, includes market analysis, identification or selection of location, land owner negotiation, legal paperwork, or many more. AEON malls depends on the continuous of construction of new malls. In malls, in case where the supply of new large-scale construction project appropriate for more development is reduced, the pace at which AEON malls down. Next, the internal risk to the TESCO financial performance. The first is technology risk. As potential risks rise and the challenges around securing the right ability to deliver change continue, the TESCO technology environment continue to demand more investment. When investing in and introducing new technologies, the failure of their IT infrastructure or key IT system result in loss of knowledge. inability to function efficiently, financial or regulatory penalties, and negatively affect their credibility and failure to develop resilience capabilities. The second one is liquidity risk. Failure to generate cash as required by TESCO business result, restricted access to funding markets or facilities, operational liquidity, and currency risk management failures. TESCO bank cash call or adverse adjustment to the pension deficit financing requirement create higher than planned cash calls, leading to impacts on financial performance, cash liquidity, or the ability to contain cash. And the last one is performance and reputation risk. In assessment due to the flagging sales growth, TESCO has been under pressure. They also have an impact on in financial result due to their reputational risk. The downside of this failure to protect the image and brand of the company may lead to lack of faith and trust and a decrease in their customer base and impact their ability to attract and retain good people.
Next, part 4. Projections and recommendations. Financial health and performance. For the conclusion, no single metric of financial ratio can identify the overall financial and operational health of a company. It is because, first, liquidity will tell you about a firm's ability to ride out short-term raw patches. Solvency tells you about how readily it covers longer-term debts and obligations. And third, operating efficiency and profitability say something about its ability to convert inputs into cash flows and net income. All of these factors together are necessary to get a complete and holistic view of a company's stability. It can be concluded that AEON and TESCO both have advantages and disadvantages in financial management and health. This is because TESCO excels in liquidity and solvency, while AEON excels in operating efficiency and profitability. 4.2 Future Financial Performance Forecasting. The graph above is about performance forecasting for AEON, and next the graph is about performance forecasting for TESCO. Based on the graph chart above, it shows that the forecast of financial performance for AEON and TESCO in declining next year, which is in 2020. This can be attributed to the spread of coronavirus COVID-19 pandemic, which has increased since early March 2020 in Malaysia. The spread of this virus occurs globally, which has already severely hampered the world economy. Last but not least, 4.3 about the proposal to improve the future financial performance. First is financial health ratios. Second, keep budgeting and forecasting flexible. Third, financial health checks. First is review your goals. Is there an opportunity for growth and succession planning? A fourth is communicate early and often. And the last one is include profit and cash flow goals. Thank you for lending your ears to hear and watching our group presentations, and thank you again. Bye.